I'm Safietou Russell from SDR Consulting Inc., and we're here today on Business Basics Friday. The goal of this session is to provide some value to small business owners in the space of tax, accounting, and general business, and then have an open Q&A at the end.
All right, welcome everyone. Happy Friday. Hope all is well with you and you're enjoying 2023 so far. If you're joining in live, go ahead and share where you're joining in and watching from. I'm here in New York and it is 43 degrees, February 24th. I will take it. Knock on wood, pretty mild winter so far. All right, so if you're here on Clubhouse or if you're watching live on Facebook, feel free to add in the comments or in the Clubhouse chat as we go along today. We will open up for questions at the end. So if you're new here, just welcome to Business Basics Friday. I'm Safietou Russell, founder and CEO of SDR Consulting Inc. Business Basics Friday is a weekly session catered to providing valuable information to business owners, and we have a variety of guest speakers that come in and help share and inform you and educate you on the many areas of your business or practice that you may need to manage. And this is strictly for information education purposes. No client relationship is being established and no specific advice for your situation. SDR is not liable for use of any use of information provided today. As far as my background, I've been in the industry 20 plus years, and I'm a CPA and enrolled agent and also have a master's in taxation. And SDR Consulting Inc. is a virtual practice based in New York, but I do work with clients all over. And I mostly work with business owners, especially mental health professionals, helping you reduce your concerns regarding tax and accounting so you can focus on your clients and most importantly, your own well-being. So today we're going to go right into our topic. I want to welcome our guest speaker, Rachel Lawrence, who'll be covering how personal and business financial planning overlap. So Rachel, the floor is yours, and thanks again.
Hey everyone, thanks so much for having me, Safi. Really appreciate you extending the invitation to be here with you today. A little bit more of my background. So I'm not terribly far away from Safi, but I'm in New England, so just a few hours up the road. It is probably about 32 and it just did like 4 or 5 inches of snow last night up here. So nice and beautiful, sunny, snowy winter day up here. I have about 20 years of experience in financial planning. I've been doing it really since I was in college, went to undergraduate for finance. I am very nerdy about personal finance to the extent that I got a master's degree in personal financial planning, probably will do a PhD in it someday. I love thinking about all of the concepts of planning, including some of the complex ones, but my favorite thing to do is to help take those and implement them in real life. That's a big part of what I do in my practice with my clients as well, is really implementing the day-to-day. And I have a lot of small business clients. So as you might imagine, a lot of the questions that they come in with are around this idea of the overlap between their personal finances and their business finances. And we talk a lot about when should they be kept completely separate. There's a few instances in which you'd want to really try to keep things very separate. And then when should they overlap? Because then there's a lot of other areas where they should probably overlap. So that's what we're here to talk about today. I want to talk to you a little bit more about just when that should happen, when to keep your personal finances separate from business, when it's okay and actually good that they overlap, because if you don't know when you should do what, tax filings, audits, legal issues, even your own mental accounting that we all do as small business owners. I am also a small business owner. It can get really messy. And you may not end up where you want to be, both in your personal finances and in your business finances. So that's the why behind this topic today. We really want to just help you keep it as straight as possible for your own sanity and hopefully for the sanity of your tax professionals, your legal professionals, your business structure. There's a lot of reasons to do this. So how would you go about doing this? Well, there are some key questions that can really help you understand more about when it's appropriate to take which approach. You can ask yourself questions like, what source is covering which expense? What makes your tax filings and preparing for audits easier on you as a business owner? You can ask things like, Are you trying to minimize your income for tax and maybe financial aid purposes for college, for dependents, or maximize it for other reasons like qualifying for loans or Social Security benefits? There's a lot of financial planning involved in both sides of that. You can ask yourself things like, what is the point of your business in your overall financial life? What is your goal for the business? And how do you view your investments in your business versus other types of investments like in the stock market, maybe via a retirement plan? So these are not all of the areas that we could cover for sure. There's many more, but I picked out a few of the ones that I feel are most important to touch on today. Okay, so let's break down each of these questions a little further. The first three questions that I just asked are pretty interrelated. So one more time, they are, what source is covering which expense? How do you plan to pay for bigger costs? What makes tax filings and preparing for audits and legal issues easier on you as a business owner? As Safie will attest, I'm sure, it is so helpful to keep your personal and your business expenses completely separate as possible. Try your very best to not put, for example, work travel expenses on a personal credit card, right? Or make sure to open completely separate bank accounts and or credit cards, if you're using those, for each business that you have. I have two businesses. I do consulting for fintechs and I do financial planning for business owners and primarily for feminists. That's my niche, my specialty. So I need to have separate bank accounts for both of those two things. And then you would use those accounts to just pay for that business's expenses. If you have to use a personal credit card, because I've been there also, I started my businesses last year. And when you're starting up anything, there's a much greater overlap usually, right? So often we find ourselves using a personal credit card, for example, to pay for something because maybe we don't have a business credit card yet, or we haven't opened that separate bank account yet. And so you need to. So if you have to use a personal credit card, my best suggestion here is try to just use one. Pick one credit card for that business, even if it's a personal one, and just use that one for your business and try really hard not to put any of your personal expenses on it. And that should just help keep things really neat, really clear. If you're using a system like QuickBooks, you can easily link that account and just download those transactions and keep the receipts from that one card if you have to use a personal card. I know it's not always possible to keep things totally separate, especially when you're first starting your business, but just sort of generally moving in that direction as much as possible is going to be really healthy for you both personally and in your business finances. Because one of the things I notice, especially when I'm working on budgeting with business owners, is that there's so much overlap, especially if you're a sole proprietor or if you have a single member LLC or something like that. It's so, there's so much overlap. You're paying for certain things that you would otherwise pay personally, but you get to deduct them for business. A phone line, maybe part of your mortgage if you have a home office like I do, maybe a car payment or something like that, internet. So there's all these expenses that you need for your business, but you also use personally, and keeping them really separated and putting those expenses onto different cards or into different accounts can help make sure that it's really clear when you actually go to file taxes for the year, or if there is a legal issue that comes up, it can help protect you from a legal liability perspective. You should talk with your attorney more about that because it also depends on your business structure. But those are some reasons why you want to keep these as separate as possible and try to pay for the really personal expenses with personal accounts. And then maybe even try to pay yourself income from the business itself, right? Give yourself a paycheck. Even when you're small, this is totally possible to do. Again, it's a really good thing to work with an accountant to help create that paycheck, or a financial planner can help you with that as well. Create your paycheck for yourself and then pay for your personal expenses with the income that you have paid yourself from the business, not directly from the business account, right? Pay for business expenses with business accounts. Again, filing taxes, going through audits, going through legal issues, that all makes it really super clear and easy. And just helps you limit some risks around legal issues as well. Your business legal structure will also dictate how separate you can keep them or not. So talk with your accountant and your attorney about business legal structures and how to keep them really separate if you want to. Okay, that's the first question, set of questions that you can ask yourself. The next question is actually one that a lot of people don't realize as they are becoming a business owner. Maybe they are just starting a side hustle. Maybe they have just started their own practice within the past year or two. It's really important to think ahead. Are you trying to minimize your income from the business for tax and other purposes? You may want to, just as an example, you may want to minimize your income as your kids are about to enter college in the year that they are going from sophomore to junior year. That's the magic year for financial aid determinations, where you get determined your expected family contribution, your EFC. We're in this right now, so it's super relevant to me. My husband and stepdaughters are actually visiting a college right now at this moment, and we are looking at that financial aid calculation. So if you want to try to be eligible for more aid, business income actually ends up contributing a larger percent to the expected family contribution than almost any other type of income. So if you are otherwise not as able to afford paying for college out of pocket, you may actually want to try to minimize your income. And having a business can really help you do that, especially if there's a lot of deductions that you can take. There's structures for your business that can help keep it really separate, like I just said. So you may even be able to work with an attorney or an accountant to structure your business so that you only get paid a certain amount in the years just before your kids are going to college. So you have to ask yourself if you want to minimize the income or if you want to maximize your income. Why would you want to maximize your income? You are going to have to pay higher taxes on it, right? Higher income tax, higher self-employment tax, FICA, FUTA, all of those great things. But sometimes it's really important to maximize your income because when you go to qualify for loans, they're looking at the amount of income that you're making. Now, some lenders will actually look closer at a business income statement to find out what were the deductions you took versus your gross revenues. But for a lot of these lenders, when you're applying for things like credit cards or car loans, mortgages, HELOCs, things like that, and you're a business owner, they are looking at your adjusted gross income as the amount. They're looking at your past 2 to 3 years of tax returns to figure out how much you're regularly taking home after all those deductions, right? And so they want to see that be higher. Also, Social Security benefits are based on the amount that you pay Social Security taxes on. So your self-employment tax, right, is part of that. The lower you make your income in order to reduce your Social Security taxes, the lower you will get in benefits from Social Security later in life. So if those are going to be a big part of your income later in life, and I happen to believe that Social Security will still be around, my personal belief, and you can take this with a big grain of salt, my personal belief is that we can expect the full retirement age of Social Security to rise. So maybe not 67, maybe it'll be 70 or 72 or something like that. It'll most likely still be there. I think people would be rioting in the streets if they didn't get Social Security benefits. So if you're worried about that, if you're looking to maximize your Social Security benefits, you should work with your accountant to figure out how much of my deductible business expenses should I actually deduct? Should you maybe not deduct some if you are trying to maximize your income for these other purposes? So personal goals that require higher proof of higher income, that really affects your business finances, right? It affects how you report them. Or if you just want to make sure you have higher Social Security, disability, and retirement benefits. That personal goal can then really have an impact on your business finances, because you may not want to take all the possible tax deductions because those reduce your income. If you're not planning to take loans anytime soon and you just want to minimize your income, maybe to help those dependents get more financial aid in college, owning a business can drastically increase your expected family contribution. So that's another way in which your personal and your business finances are really going to overlap here around education funding. Then you probably want to work with your tax professional to find as many deductions as possible that are legal, and also to pick the corporate structure that will help you from a tax perspective as well. So as you can see from some of the answers here, depending on how you answer that question of do you want to minimize or do you want to maximize your income, your personal financial goals really have a big influence here on your business taxes, on your business income. So this is another area of overlap where it's actually really good to let one influence the other. Okay, another question I always have my clients ask themselves is, what is the point of your business in your overall financial life? Do you really want it just to make income for you? Or is your goal to try to build the equity and the value of your business so you can sell it later? Or is it to allow you more time and flexibility and freedom so that you can have a certain lifestyle and control over your time? Those are all valid answers. I have maybe a little bit of each one of them sometimes in my own business. Most business owners need to make some income. We know that. But a lot of us take pay cuts, at least to start, for what we might have made in full-time employment for someone else. So thinking about whether your goal is to maximize your net income and just make as much money as possible day to day, year to year, or sell it later, or have flexibility and freedom and sort of a lifestyle practice. So this is another area where it's really healthy to let your personal goals influence your business goals. Why should you be killing yourself out there hustling to try to make more income in your business if you know you can support a very fulfilling lifestyle with less income and less work, right? Or if you're hoping to sell the business for significant profit, maybe the total profit is less important. Maybe the profit number itself is less important than total revenue or total volume or whatever other KPIs, key performance indicators, a potential buyer might want to see. So you actually need to think a little bit more strategically about what are the numbers that a potential buyer would want. And then if that's your goal to sell your business, think about it from a buyer's perspective and let that influence you on how you actually manage your business and what you're managing towards. And then if your business is just to support your lifestyle, right? It's important to know approximately how much you have in your ongoing expenses. So average monthly or annual expenses, including your personal expenses, by the way, so that you can set yourself a target income amount. Because if that's your purpose of your business, then you need to know personally what you need to make in order to set your targets for your business income. So another area where it's really important to have some overlap between personal and finance, business finance. And then the last area is just how we think about investments in our businesses versus investments in other options, right? You can think about your business as a private company, 100% owned by you. When you invest in the stock market, on the other hand, you're buying other companies that can be owned by anyone willing to buy a share of stock, and then you own a teeny tiny little slice of ownership of that company. So if you're pouring all of your extra money into your business, you could kind of compare it to buying just more and more and more shares of one company that is on a stock market. Now, the difference is that you might be one of very few people who know all the ins and outs of your business and your company and what the potential value is. So you may make a very different decision about investing in yourself and your own company versus a publicly traded company, but you can see the analogy here. So if you decided to do a financial plan and you're a small business owner like this, then you'll want to talk in detail with a financial planner about how you answer that question, two of those questions above. What do you want? What do you see as the purpose of your business in your financial life? And how are you viewing the investments, right? Because they might want to include some of the equity and the value in the business if you hope to plan to sell this someday. Or maybe it's better just to include in your financial plan the potential income from the business instead, as well as some of those deductions. So this is yet another example of how business finance really influences your own personal finance. So of course, there are many other ways we could go into, especially for sole proprietors and single member LLCs, where they can both, personal and business finances can both overlap and also might need to be completely separate. But these are some of the really big ones to watch out for. So that's what I wanted to share with you today. I hope you found it helpful. Safie, I think that's the extent of what we were going to walk through today, and I'm happy to take questions.
Perfect. Thank you. Thank you, Rachel. That was great information, and I love the overlap. And one of the things, let me just pull up my Facebook here in case there's questions. If there are questions, go ahead and drop them in the comments in Facebook or on the Clubhouse chat. So what I loved is the overlap. And what I stress for all business owners is that you definitely have an open communication between your accountant or CPA, your financial advisor, financial planner, and even legal team, because so many things overlap, as you can see today, in relation to income, taxes, longevity, retirement. They're all interrelated. Student loan, like all those different things are so interrelated when you're a business owner. So it's really important that you have an open line of communication with all those parties. And if you are working with an accountant or a CPA, you want to make sure that you're working with someone who does work with their clients all throughout the year, as opposed to just at tax time. But you also want to make sure that you have an arrangement in place to have those consultations throughout the year. It may not be built into your current package if you don't have one. So a tax preparer is not necessarily someone who's going to be like an advisor to you throughout the year. You want to make sure you have those open lines of communication and discuss that with your current professionals to make sure they're a good fit for that type of arrangement. So that's really important. I loved, everything that you went over, Rachel. And I think some of the things that really stood out for me was the clear separation and how it can have a legal impact, a tax impact, and an audit impact. And that's so true. For example, with an IRS audit, if you're audited on your business, specifically your Schedule C, let's say you're a Schedule C filer, whether you're a sole proprietor or a single member LLC, if you have a lot of commingling, business and personal accounts being used interchangeably, then the IRS is going to want to look at all of your accounts, and you have to then identify all deposits, all expenses and deductions, and it becomes a lot more stressful. So even if you're a sole proprietor without an entity, it is still a good idea to have a separate account that you run all your business activity through, because then in most times the IRS will stick with just reviewing that account, especially the numbers, if the numbers align with what you reported on your return. If they don't, then they may dig a little further. And yes, in the beginning, there will be those times where I don't have a business credit card and I don't have enough money in my business to pay for this expense. So what do I do? And so in those instances that is going to happen, you just want to have really good, solid record keeping, and then work towards developing the separate credit card for the business and so on, so that you can work towards that goal. But definitely in the beginning, there's going to be more overlap, as Rachel mentioned.
Yeah, I just experienced that. I'm about to work with Safie on my own personal businesses, and you'll see, Safie, when you review it, I definitely didn't follow that advice strictly, but it's because when you're in the thick of it and you're just starting your practice, there's so many things to think about that it's not always top of mind,
right,
even for somebody who's a professional at this like me. So now I'm slowly opening the accounts that I need to open, and I'm trying to make sure that for this year, since January 1st, I know this year's going to be neat and clean, and like everything is on one thing for the business. So even if you're not there yet, it's okay, but just work your way towards it, like Safie said.
That's the key. That's the key. Some people come in and like, the IRS is going to come after me. I'm a mess. Trust me. When you're just getting started, it's very normal, but there are people who are in the millions who are a mess. So you're likely okay. You just want to, like Rachel said, start the process now. So as your business grows, it's already in place. The worst thing is to try to go back. after several years and try to fix this stuff, it becomes a lot more costly to do it on the back end than the front end, but it still should be done nonetheless.
Yeah, exactly
Absolutely.
right. Yeah.
And now I want to talk about the mortgage and
Yeah.
income. Whew. So this is a big one, right? So
Yeah.
a couple of things that I come across as a CPA. Mortgage companies want comfort letters, or CPA letters, they refer to them as, and nothing against them. However, any CPA who has a professional liability insurance, which they should, most likely is not going to write those letters, because unless they're going to go through a full audit of your business, which could be $8,000 and change, I don't do audits, they can't really vouch for those numbers. You know, even if someone does your bookkeeping, they can't vouch for what the mortgage companies are looking for at times. So they are usually doing that for a level of, comfortability, in your numbers, and that you can pay your mortgage. But just understand, whoever's signing off on that letter, what they're putting on the line when they do that. So, so just be careful of that. The other thing is, in reporting your income and expenses, there may be certain deductions you don't want to take advantage of because you do want to make your have your income higher for the years you're looking to maybe get a house. But you want to be careful that you're not just eliminating expenses that you actually did pay for, because number one, the pattern from year to year, well, you had advertising last year, you didn't have, for the last 5 years, you didn't have it this year all of a sudden. Your expenses dropped by 50% all of a sudden this year, and the worst is filing the return that way and then trying to amend it later to then pick up the expenses. That is fraud. Just for the record, it's fraud. So please don't get involved in that mortgage fraud where you're reporting on your return just for the purpose of your mortgage and not what actually happened. Maybe you won't take advantage of the home office that year, or things like that. Maybe don't retirement deductions, SEP contributions, because you don't want to minimize income. So maybe those are some of the things you may want to consider when you're looking to, show more income than not, or, in certain structures, like you mentioned, how much you pay yourself can affect how you qualify for those type of loans. But you just want to be sure that you're following all the rules, right? So there's ways to legally minimize your taxable income, and there's ways to, show a larger amount without wiping out deductions you actually pay for just to get a mortgage. So just be careful with that whenever you're dealing with loans and mortgages and what you're reporting versus what actually happened. But it is a great point that they're all connected. You're looking to increase your income for the loan, but then you have a child going to college in a year, and that affects that. So the planning is what's key, right, Rachel?
Yep, that's it. And actually, that's why I work so closely with accountants like Safietou on client work, just to make sure like they know exactly what the projection is. That's tax planning. That's the thing that we do throughout the year when we look ahead and we make a projection and we say, oh, this is how this would impact you this way. Maybe you want to make this decision instead. Maybe this is the year for you to do part-time work on a W-2 instead of always doing 1099 consulting work. Or maybe this is the year for you to hold off on a major investment in your business. Maybe you need to purchase a new software system or something like that. Maybe you hold off until next year because you want to maximize your income for a loan. Or maybe you do that this year because you want to minimize your income for your kid who's going to college. So that's where a lot of that overlap comes in.
Yes. And that year-end planning, accelerating income or accelerating deductions right before that December 31st cutoff is definitely key in making those determinations. And the key point you mentioned was tax plannings throughout the year, right?
It is.
It is not, there are certain things that could be done at tax time for the previous year, very limited at that point. What you want to do if you are in business is be working with a professional all throughout the year, not at December 29th, not at April 15th, but definitely throughout the year, because then you can spread out whatever plan is in place.
That's right. Yep. I tell clients to go find their accountant in like June, because that's the best time to go start working with someone, and you get in and start to do the planning, and then you're ready. And your accountant already knows you by the time that those busy seasons come around. So really good time to go.
Right now is not ideal.
Not the best time to start the relationship.
To start the relationship. Not,
Yeah.
I have a few handful of new ones that I'm still taking on, but yeah, at this point of year, it becomes very difficult to really get to know someone and properly work with them. So I don't see any questions that have come in. I think this has definitely been really helpful. I want to thank you again, Rachel, for taking the time and sharing your experience with us. And go ahead and share with our audience here how viewers can get in contact with you.
Yeah, so my business name, which I totally didn't say, is Reverie Wealth, REVERIE, Reverie Wealth. And you can just find me on reveriewealth.com. I'm also on Instagram at reverie.wealth. You can find me there. And I look forward to seeing anybody who's interested. I do also do ongoing services, and then I sometimes do one-time projects as well. So folks can look up who I am and what I do. I generally work with folks who consider themselves intersectional feminists. So that could be men or women or non-binary, whatever you describe yourself as, but folks that are really looking to a more equitable world for all of us, particularly with a focus on gender, but also in many intersectional spaces. So that's who I am. That's primarily who I work with. I mostly work with folks who are in their 20s to 50s who are still earning their own income. A lot of small business owners, as I said, typically that's a really good fit for us. I'm also a small business owner, so I understand that part of it too. And yeah, that's where you can find me, reveriewealth.com.
Perfect. Thanks so much, Rachel. And so anyone who has joined us towards the tail end, I'm Safie Russell, founder and CEO of SDR Consulting Inc. And you can find me online at Safie Russell CPA. Also, you can call for an introductory phone call, 15 minutes or so at the office number of 516-255-6603. I provide tax, accounting, and consulting services for business owners, especially mental health professionals. All right, everyone. So happy Friday again. Enjoy your weekend. Make sure you do something for yourself this weekend. Self-care is important. And Rachel, I'll definitely look forward to collaborating with you again and working with you. Okay?
Awesome. All right.
Take care,
Thanks,
everyone.
Safie. See you. Bye.
Bye-bye.